Markets are looking on the weaker side, but it's been, driven by numbers. Let's look at L&T Finance. They declared very strong set of numbers. One has to say, looking in the environment that the space is in, it's up 2.6%, and you can see, despite markets going down, we've not seen any major movement on the downside for L&T Finance. Let's welcome in the management at L&T Finance. The MD of L&T Finance Holding is now joining us. So firstly, congratulations, second straight quarter of great numbers. Can you just describe the quarter for our viewers? You have various segments, you have implemented a new strategy. How is it playing out?
I think the Q2 results, though they are very good, need to be looked in the context of the strategy that we spelled out at the beginning of the year. The strategy was quite simple. Our RONW at that time was less than 10%, the ROE, and we put a strategy of creating superior shareholder value by taking the ROE to 18 to 20% by 2020. This was to be done by a mix of right business, right structure, and right people. We started this by preparing ourselves for the growth, by cutting costs, by optimizing cost, and basically building muscle to be ready for the growth. We also actually selected the businesses that we will focus on based on which businesses we are distinctive and are able to build distinctiveness further. Based on which we chose 3 lending businesses, which is rural, housing, and infrastructure, that is wholesale, and 2 non-lending businesses, which is mutual fund and wealth. So with this now, let's look at this quarter, how we have done. So our focus businesses have grown, disbursement has grown by 28% and book has grown by 24%. The cost initiatives that we have taken, the cost to income ratio has reduced from 33% last year to 28%. The NPA quality and has remained same. In fact, we have strengthened our balance sheet by taking close to 122 crores of more than regulatory voluntary provisions. Resultantly, the 2 big numbers, headline numbers that I would like to talk about is that to equity shareholders has increased by 33%, and most importantly, what I call the holy grail is the ROE is up from around 9.8% in the same quarter last year as well as the Q1 of this year to about 11.7%. Now this gives us the confidence that the strategy is robust, and at the same time the milestones that we have put for achieving the strategy are being achieved.
In terms of overall loan growth, it looked to be strong. What was it led by?
So as I told you, the disbursements in focus businesses is up by 28% and the book is up by 24%. At the same time, the defocus businesses, we have degrown. We have actually let the book run down, and there the overall book of defocus businesses has fallen by close to 31%. Now what this has done is done wonders to the profitability, obviously, because the defocus businesses are businesses where we didn't have any strengths, we didn't have scale, and we were losing money. And this bold decision in the strategy of stopping to do those businesses completely has led to the profit increase that you see. The growth in focus businesses is all round. In the rural business, the major growth is contributed by microfinance, but also ably supported by two-wheelers, and we even see a good turnaround happening in tractors, even though at this point of time the growth is slightly negative, but we see it turning around. In housing, we see a very good growth in our non-salaried and loan against property portfolio, as well as our builder finance portfolio. In wholesale business, the growth is happening in all our chosen sectors, which is renewable energy, roads, and especially a very smart growth in fee income, which will actually get the profitability of the wholesale business back to steady state levels.
In the last 2 years, can you explain us what has been the strategy shift? Of course, the short-term strategy change was about 6 months ago, but how has it changed the retail portfolio?
Absolutely. The strategy is not so much of the last 2 years. Last 2 years, we were tactically reducing certain portfolio and increasing certain portfolio. The strategy is exactly 6 months old. and we have put this strategy for the next 4 years. Very clearly, it is for the growing, the strategy talks about growing the businesses that, the focus businesses that I talked about, and most importantly, also doing things much more simply, building structures which are simple, merging too many entities that we have. The overall movement is towards two things. It is towards moving to those assets, those businesses that we can do well. We believe that we are among the market leaders, and secondly, moving towards simplicity. So the initiatives that are already being put and the initiatives that you will see coming in are around these areas, creating centers of excellence in our growth areas, cost optimizations, building strong risk frameworks, and most importantly, I believe, building very strong digital and data analytics centers. These are things which will make this kind of performance sustainable and continuously improving.
Retail book, what will be the outlook? What is the share of the same and what's leading the growth there?
So 2 years back, the retail growth was coming from all the products that we were doing. But out of this, many of the portfolios, we were not able to scale up since we were not strong players in those areas. Now we concentrate on very specifically, as I told, in retail especially, in 3 rural products, which is microfinance, two-wheelers and tractors. And in housing, we concentrate on non-salaried housing and LAP. These are the 5 sub-products in retail that we are doing. And we see very strong growth in microfinance. We are showing excellent growth in housing, in retail housing. Two-wheelers is somewhere where we are showing a fairly steady performance, and we expect growth to pick up from the 3rd quarter onwards. Tractors, we are seeing a turnaround. Our growth in tractor disbursement was minus 56% in Q1. From there, it has come to minus 30%. And we expect this to start turning around by Q3 and Q4. We are seeing excellent festive demand in tractors to coming. So it looks like our chosen sectors are doing well. And on top of it, since we are distinctive in our chosen sectors, we are likely to outperform the sectors also.
One of the key takeaways for any NBFC would have been the cost of funding. Can you just tell us that environment is just taking the numbers of the recovery faster?
So cost of funding, reduction in cost of funding definitely helps. We have ensured that we have the right mix of bank borrowings and market borrowings to see that the transmission of the the policy rates to our actual cost of funds happens quite fast. So most definitely our cost of funding has reduced, but some part of it is also passed on to the final borrowers. The NIMs, the steady NIMs that we have is an indicator of the improving product mix. As I have been saying and emphasizing, as we stop doing products where we don't have pricing power and do more and more products where we have pricing powers, we are confident of maintaining steady NIMs, and cost of funding reduction most definitely helps, but we would also be passing on a large part of it to the final borrower. I mean, it's a competitive market and we need to do that.
Do you believe that NBFCs in India are in a sweet spot right now to take away market share?
See, market share depends on which areas and which products you believe you are distinctive and what are the strengths that you have identified for yourself.
So what I meant actually was, will the NBFC sector be able to take market share from PSU banks because of capital provisioning issues that they have? Is that something which you continue to believe will lead to the growth of the sector?
I don't want to comment on the whole sector as such, because there is increasingly less differentiation between what generally NBFC offers and what banks offer. There are many banks now which are in the microfinance area as well. But it is important that every player identifies its strengths and plays on their strengths. Our strength, what we have seen, especially in the retail segment, is our turnaround time. We have very clearly identified turnaround time and giving a loan the fastest to the customer as our core strength, and all our investments in digital data analytics processes is going in that direction, which is helping us to improve our market share.
Sir, thank you so much for taking out time for us. That was the management at L&T Finance. Good set of numbers. The stock is up around 3%. Taking a break, coming back in 2 minutes.